Good day, ladies and gentlemen. A warm welcome to our technical summary video on the IRBA Code, the revisions to the definitions of listed entity and public interest entity. As always, my name is Letty Janse van Vuren, and I will be guiding you through a short technical summary of this topic. Now, the exposure draft was issued by IRBA in December 2022. Very important, it contains all the changes to the definitions of listed entities and public interest entities. And some of the most important changes is that a PI evaluation must be considered for all entities. So you've got to document this on your file. And I'm pretty sure that your planning documents already has a question in there that says, is this client regarded as a public interest entity? Now, before you can say yes or no there, you have to go and measure it against the definitions in the IRBA Code. Right. Why is it in the IRBA Code? Because if it is a listed entity or if it is a public interest entity, there is a lot of enhancing, or there are enhanced requirements for independence as it is required by the code. Right. So let's go and have a look at what I'll be dealing with today. I'm going to look at why this is important first of all. Look, I always like to do that because then we know how it affects our lives. I'm going to do a short little introduction on that. Going to look at the content of the actual publication. That's the heading to it. And you'll see this is in the middle of it. Okay. So this is the full name, Proposed Amendments to the IRBA Code of Professional Conduct, Revisions to the Definition of Listed Entity and Public Interest Entity in the IRBA Code. So that's the full name of the document. Then I'm going to go through an overview and a summary. I'm going to look at the main changes to the definitions of listed entities and PIs, and then I'll get to just a little conclusion on this topic. All right, so short and sweet, let's go. The abbreviations that I'll be using during the next 10 minutes or so is IRBA is the International Regulatory Board for Auditors. The code, I'm talking about the IRBA Code of Professional Conduct for Registered Auditors. If I talk about the IRBA Code, that's the IRBA International Code of Ethics, right? Including the International Independent Standards, and IRBA stands for the International Ethics Standards Board for Accountants, also known as our International Ethics Board, as they're fondly called, right? It is the ethics board, the ethics leg of IFAC. The other leg of IFAC is the IAASB, who is responsible for the standards. LE is listed entity and PI is public interest entity. So let's go and have a look. Why is this whole issue so important to us? Well, as auditors, independent reviewers, and accountants, we have to adhere to our code of conduct. It is crucial, not only in the performance of our duties, but in us being ethical auditors and independent reviewers and ethical accountants. So whichever professional body you belong to, you have to subscribe to that code. And all of the codes, as luck would have it, come from the IRBA code. IRBA have taken this code, they adopted it in 2019 already. The revisions, they've made certain revisions later on, like the fee-related provisions, the non-audit services provisions, and those so forth. For all of those ones, I've already done separate technical summary videos on that. So feel free to go and have a look at those. If we have a look at auditors, independent reviewers, and accountants, we should be aware of all the latest publications and the guidance that are issued by the regulators as well as the standard setting boards, and that includes IRBA and IRBA. So this one very specifically, we need to worry about that because we've got to comply with it. And the definitions of listed entity and PI will then determine which of the sections of the IRBA code must be applied by all accountants and auditors. Okay, Part 3 of the code is applicable to everybody. Part 4A is not applicable to everybody. It's only for audits and independent reviews. And for public interest entities, there are certain sections inside Part 4 that is only applicable to PIs. So the relevance to your clients here, I'm afraid, is none. They don't really need to worry about whether they're a PI or not. Okay. If you're going to ask them if they're a PI, they're going to say, no, thank you, we just ate. Introduction. Okay, let's have a look. The original exposure draft was issued by IRBA in January 2021, And then in April 2022, IRBA released the final pronouncement on this. IRBA then took this code, the changes, right? They took the one that was released in April, and in November, they then released these proposed amendments to the definitions of listed entity and PI in the IRBA code. Now, the IRBA code was revised in November, and it was approved. The November 22 ones was approved in November. All right. So that's why I say that they released this document in December. And IRBA then very specifically went through and they included the South African requirements that relate to the definition of a PI. Because we need to know in South Africa, if we have a micro lender, is that included? Or is it only included if they are in the financing sector, the short term, the credit loan, credit provider sector, and they have assets under their management of more than 50 billion. That's what I'm talking about. That's the definition, and that's how much detail we go into. So because they don't give that in overseas or internationally, we have to decide, and we take what IRBA has decided on that as part of what is regarded as a PI in South Africa. The document very clearly also talks about the confusion that is there at the moment between a PIS and a PIE. PIS is a public interest score and PIE is a public interest entity. You can have a high public interest score, above 1,000 if you want, without being a public interest entity. It might just be based on number of employees and on turnover that puts you over that edge. Right, but you can have a company with a PI score of 100 and they'll be regarded as a public interest entity. So please don't think that if you've got a high PI score that you've got a public interest entity. You have to keep that separate. And there's a very nice section, that's why I've got it in blue. In your actual document, there's a whole section on how they clarify between these two definitions. Okay. So public interest score is normally what we use to see whether or not a company needs to be audited or independently reviewed or nothing in terms of Regulation 28 of the Companies Act. The proposed effective date for this exposure draft that IRBA has now issued will be for audits of financial statements for periods beginning on or after 15 December 2024. So it is still a ways off, but that is the effective date of the IRBA code, as well as the new definitions for public interest entity and listed entity. The fee-related provisions have already come into effect now for years starting on or after 15 December 2022. But these ones for the listed entity and PI, only 2 years from now. Right. Request for comments. If you need to comment on the document, it needs to be submitted to IRBA by the 3rd of April 2023. Let's go through a quick little overview of the document. Huge document, this one, 50 pages all in all, right? Issued by IRBA in December, and they talk about the background. Where does this come from? How did this arrive? What are the IRBA amendments that have been taken? And what process did they follow in South Africa to streamline this and to tailor it specifically for the South African context? And then they went around and they said, okay, this is the rationale that we followed for the proposed amendments to the IRBA code. And a lot of that is based on the South African context. So if we do a full webinar on this, it will be in a lot more detail because it's normally 2 hours. So for today, I'm going to summarize the most important aspects for you. Some of the significant matters that they proposed would be the adoption of the IRBA revisions, obviously. So everything that IRBA said must change, they'll do. Then they changed this. The firm's responsibility to decide whether an audit or a review client is a PI doesn't just now depend on certain factors that you apply to it. It is now dependent on whether they fall into a listed category. Not listed on the stock exchange, a category that's listed in the definition. They've taken away the firm's option to treat an entity as an exception to these requirements. They've got the opportunity to consider the client not to be a PI, but then you've got to document the reasons. That's now been removed completely. All right, so if they fall within the sections, within the stated categories, they will be a PI. And even if they are not a PI, they still give us a list of factors to consider to see if they might still be PIs again. So the list of entities that are considered as PIs has been included in here. Very important. And when the firm has applied the independence requirements for PIs, then there must be public disclosure of that fact in the audit report to say that we have implemented Part 4A or Part 4B of the IRBA code. The changes, in a nutshell, a listed entity is now called a publicly traded entity. It's no longer a listed entity. You'll see in a while the listed entity actually falls under this umbrella. The umbrella is now called publicly traded entity. PIs are much more clearly defined now. Some of the paragraphs of the codes were edited, some of them were inserted, and paragraph 400.18 SA was edited. So you'll see wherever it's got the R, that's the requirement paragraphs, that's the code themselves, the requirements, and then if it's got SA afterwards, that is the SA material. Okay, A1, A2, those are the application materials. So they've inserted quite a lot in here. So you can refer to the actual exposure draft if you want to. It looks like this, and you will find it there. Right, I've given you all of that. You'll find it here under the proposed revisions here specifically. All right. There's a markup from the extant version if you wanted to see what has changed. I quite like that because I knew what the limits were before for PIs and whatnot. I've actually given it to you on the slide, so don't worry about that too much. So a publicly traded entity is an entity that issues financials that are transferable and traded through a publicly accessible market mechanism, including listing on a stock exchange. So that's publicly traded entity, a PTE, and a listed entity is then an example of a publicly traded entity. Okay, because they are defined by the relevant securities laws or regulations. But very important for you to realize that all publicly traded entities are PIs. What is the definition of a PI? Well, a PI for purposes of Part 4A, which is for independence and audit review engagements. A PI falls within the following categories, these four. If they're a publicly traded entity, or they take deposits from the public, or their main functions is to provide insurance to the public, and then any entity specified by law, regulation, or professional standards for the purposes as prescribed in paragraph 400.10. Then they go and paragraph R14.8 or 400.18 SA more explicitly defines the categories of PIs that take deposits and provide insurance. Okay, to make sure that they then comply with the requirements in D. So let's go and have a look at this paragraph now because you'll recognize this one. So a publicly traded entity, there's A, B, C, D, all right? So that's there. Other public entities that they've said there with to receive money for a public purpose with an annual expenditure in excess of 5 billion, or they are responsible for the administration of funds for the benefit of the public in excess of 10 million at financial year end. So you'll see the limits have quite been lowered now. Banks as defined, right? Nothing's changed there. Market infrastructures, insurers as defined. They've taken out short-term, long-term. It's just anybody that's defined in terms of the Insurance Act. Collective investment schemes, our money market schemes, our hedge funds. It is now if they hold assets in excess of 10 billion rand. Oh, I left out the R there. It was 15, it's now 10. Funds defined in the Pension Fund Act, if they hold it and they're responsible for safeguarding the client's assets in excess of 10 billion. Pension fund administrators, if they have their assets under the administration of more than 10 billion, it used to be 20 billion. FSPs, as defined in phase, if they hold funds or products on behalf of their clients in excess of 10 billion, used to be 15. Medical schemes, they now say, with a membership in excess of 89,000 beneficiaries. Very specific. I don't know why 89. I tried finding out why, but it's just 89,000. And it's not just open to the public. They've taken that out. All right. Anybody that's users of the exchange in the Financial Markets Act or any other issuers of debt and equity instruments to the public. So these might even be your crypto service providers, right? That would be included in there. There's your source document that you can go and refer to. And you can also then refer here to the section on the IRBA website. They've got a little bit more of a write-up on there. So in summary, what do you need to do? You need to determine whether your entity is a PI by measuring against the new definition, checking to see whether or not they fall in the categories. If they fall under paragraph R400.18 SA, that's the one now with the limit and everything. And then for all other entities, if they do not fall under the above categories, consider the factors that are set out in paragraph 400.9 and 400.19A1. Very important, you have to document your consideration of whether or not your client, your entity, is a public interest entity. So make sure that you document that. You might want to have some standard checklist on file where you can complete it to see no, 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 no. Based on this, they don't fall under any categories, so they are not a PI. Or if they fall in one of them, you can stop there and say yes, based on this, they are regarded as a PI. You've got to keep that on file. Right, so if you still need more detail, remember that we've always got our monthly newsletter on things that change. The technical alerts that are published daily on LinkedIn, you can follow SAAA there. Webinars on demand, which is our actual recordings of individual events, whether they were live or not. We've still got our live webinars via emails that you'll find. And then very important, the MCLU subscription for the monthly compliance and legislation update so that you can stay on top of what's changing in our fields. Right. For all of this, please refer to the SAAA website. All right, ladies and gentlemen, I trust that you are a little bit more clear now on what is included in the new definition of PIs, because it's very important. You need to know how to define a PI if you want to go and see which fee-related provisions are also applicable in the code. So everything is interlinked. Okay, but from me, Letty Janse van Vuren, thank you, enjoy the rest of your day, and goodbye.